Welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because Bitcoin is still above all its major support levels, and it's so important not to let the short-term noise cloud the bigger picture. I know nobody enjoys 10% corrections, and there's a lot of fear out there surrounding this being the cycle top, but Bitcoin is still well above our 20-week moving average, which tends to be a very solid target for short-term corrections. It also aligns nicely with where our previous high is at about 109,000, and we've seen the 20-week moving average act as support so many times already this cycle. So it is the first level I'm watching out for, and I wouldn't be surprised if the same way we got longs to pile in and get wrecked at the all-time high, we could get shorts to pile in here on a break below 112K, just to end up being a false breakdown that breaks higher after retesting that 20-week moving average and previous high. And of course, below that, we have the 50-week moving average, which has acted as our macro bull market support over and over again for the entirety of this cycle. It kept us in the game in April of 2025 during the tariff drama. It kept us in the game in August of 2024 during the Japanese yen carry trade drama. And it kept us in the game in September of 2023 when the SEC was going after Coinbase and Binance. So that's my macro line in the sand for whether or not we are still in a bull market, and Bitcoin is still well above where it is likely going to run into that moving average. And now I know there's other reasons why people are concerned, like the rising wedge pattern we see on Bitcoin, and that has a breakdown target of the low 90,000s or mid 80,000s. And although this can end up playing out, I don't think it's that reliable for making major investment decisions like selling your entire portfolio because of a rising wedge pattern breaking down. Is it a nice thing to keep an eye on? Yes, but I don't think these patterns are that reliable for major investing decisions and could maybe be used for some short-term trading, but there always has to be a bearish argument on the other side of the market. Right now, this seems to be one of the main ones, and that's just a normal part of being a market participant. There's always going to be bullish and bearish arguments. You just have to decide if the bullish arguments combined are better than the bearish ones or vice versa. Another reason why I have pretty high confidence that we haven't seen the cycle top is because price action has been way too similar to 2021, and the more price goes down in the short term, the more and more comparisons we're going to be seeing to the previous cycle. And it's cool to find these fractals in Bitcoin's price history, but I rarely see them play out the same way they played out before. Usually once everybody gets on board and starts believing it's the same fractal, the price ends up surprising everyone by doing something differently. So for me, my base case is very straightforward. I believe Bitcoin is going to hold that combination of the 20-week moving average and the previous high at 110K and have a final push going into September. I am open to a full reset where Bitcoin consolidates for longer and retests the 50-week moving average as macro support before perhaps rallying into the end of the year or even early 2026. But that is not my base case as of right now. It's just an alternative outcome I'm watching out for, but I believe it's unlikely that the cycle is over and that 124K was our top for Bitcoin. Usually for a major local top, or even more so for a cycle top, you would expect to see extreme greed market sentiment with extreme greed risk taking, and that's usually what causes the bubble to burst. But if anything, we've been seeing sentiment go sideways and remain quite neutral as Bitcoin has slowly grinded higher. And you can see this so clearly in the social sentiment. Just last week, retail was incredibly bullish, calling for 200K Bitcoin and calling for 9 to 10K Ethereum. And now here we are just 1 week later with a roughly 10% correction, and retail sentiment has flipped to ultra bearish, with Bitcoin trading around 113,000, which is an insane headline if you think about where Bitcoin's price was just 1 year ago or 2 to 3 years ago. I mean, just last week, I was hearing that these US 401ks that are going to allow people to buy Bitcoin are going to send Bitcoin to 200K in 2025. And anybody who doesn't believe that's the case is just spreading FUD. But unfortunately, those short-term holders that were promised 200K Bitcoin by end of year are now selling at a loss with this 10% correction, because they were expecting their money to double quickly, and instead they're having to watch their money go down. And the chances of us hitting 200K by the end of the year have gone down significantly. And when it comes to Bitcoin seasonality, I still think we can end up closing August green, and September is going to be a coin flip because I know so many people are expecting September to be red. So I'm still open to August being saved and turning green, and September perhaps being green as well. And this is actually one of the main reasons why I created this chart and why I'm waiting for the very expensive region to start profit taking aggressively. This Bitcoin bull market has been quite calm and collected, where we rally, cool off into the 50-week rally, cool off into the 50-week rally, cool off, rally. And if we do cool off here once again, that would give us even more fuel to push higher. And the reason why I'm not too concerned quite yet is I would expect a blow off top quite move with extreme greed and extreme chasing to end up ending this bull market and bubble. And the longer we go without seeing that, the longer price can continue its uptrend. So what have I changed about my portfolio now that everybody is panicking that perhaps the cycle top is in? As I said in Monday's free weekly report, no changes were made to my portfolio this week. The reason we take small profits on the way up is so that we are not panicking when prices go down. And as always, if you'd like to learn more about my portfolio automation system or mental models I use to navigate this market or common mistakes I see so many investors making, you can check out the Crypto Enjoyers program in the video description. But for now, all we can do is wait and see what happens once Bitcoin breaks back below 112K. Is it a quick false breakdown, which would be short-term bullish, or does it end up falling back below that old support level, which would be a deviation back into our old range and could perhaps be a warning sign? As for the Bitcoin ETFs, we have been seeing some outflows recently, but compared to the inflows that came before them, I just see this as some ETF investors doing some small profit taking and don't see it as a major warning sign quite yet. What is a bit of a major warning sign is the fact that Strategy is barely buying any Bitcoin now because of their recent equity guidance, where they said they're only going to be issuing shares to buy Bitcoin above 2.5x NAV. And when they're below 2.5x MNAV, Strategy will tactically issue MSTR to pay interest on debt obligations and fund preferred equity dividends when otherwise deemed advantageous to the company. So I would love to hear your opinions on this, but I believe the long story short here is that Strategy is not going to be issuing any more MSTR to buy a bunch of Bitcoin, because it getting back above a 2.5x MNAV at this stage in the cycle, which is a $600 share price based on current holdings, and the price is currently at $340 per share. And this is a chart I published back in November, but kind of stopped talking about it because I realized that Strategy is similar to other cults in this asset class like XRP or Cardano, where you can't really have a rational conversation because the bag holders are convinced of the narrative at the time, which ironically enough was infinite money glitch. I don't know how anybody could say something like that with a straight face and not realize that perhaps there could be something missing here. But anyway, we had our peak FOMO blow off top when it hit 550 per share, similar to the peak FOMO in February of 2021. And then Saylor used a lot of that volatility and a lot of that premium to buy a ton of Bitcoin. And that makes sense and explains why the MNAV has been dropping and why Bitcoin has been able to make new all-time highs, but Strategy hasn't been able to, because that MNAV is being compressed because of all the share issuance to buy more BTC and all the other offerings that Strategy is doing. So this is definitely something I'm watching. Strategy is on its 50-week moving average, and once it broke below the 50-week in the previous cycle, that was a major warning sign that the cycle was in fact over. And in 2021, Strategy wasn't able to make a new high like Bitcoin did because Saylor was issuing stock to buy Bitcoin, and that puts upward pressure on Bitcoin's price, but downward pressure on Strategy. So this is one that we might watch going forward. I just don't enjoy talking about it on the channel because it's hard to have a rational conversation with a company like Strategy, which has a very strong cult following. But that's enough discussion about Bitcoin and Bitcoin proxies. Let's talk about Ethereum, which is arguably the strongest asset in this asset class right now. After an incredible 3x move off the bottom, we've now run into some resistance at the previous all-time high, but I believe this is just going to be a quick washout and breakout into price discovery with a brief retest to the $4,000 price level, which also coincided almost perfectly with a Ethereum CME futures gap. And I know a lot of people don't like these gaps and they think they don't work. I think the gaps just act as a good representation of FOMO because we create them by pumping over the weekend when traditional markets are closed. And usually that FOMO ends up running into some mean reversion and reversal as we go back and fill in those prices where the market just teleported higher over the weekend. And now that Ethereum gap has been completely filled. Just last week, Ethereum set its highest weekly close in 4 years. So I don't know why we're seeing so much fear out there for Ethereum right now. And we saw Ethereum bring in so much capital via spot ETFs, nearing almost $3.75 billion in inflows. And similar to Bitcoin, Ethereum has been seeing some outflows recently, but compared to the inflows that came before it, they're pretty small. I just see it as profit taking, similar to the profit taking we saw in July after the incredible inflows that went into that rally. And the Ethereum treasury companies are still in full swing. Bitmine is now holding $6.6 billion of Ethereum, and Tom Lee seems to want to be the next Michael Saylor. And I think this will continue to be a powerful narrative as long as Bitmine and Sharplink and the Ether machine are able to continue buying Ethereum and taking that supply off the market. Narratives are incredibly powerful in this asset class. And as long as big holders believe these treasuries are going to keep scooping up supply, I believe that'll continue to put upward pressure on price. And Ethereum Bitcoin still hasn't quite reached the major resistance level I'm looking out for at 0.041. This level has been a major pivot for a very long time for Ethereum against Bitcoin. So I would expect some consolidation there. But my target for this cycle is still around 0.05, where we had the bottom in 2022 and where we had the breakdown in the Ethereum Bitcoin pair back in July of 2024. As for Solana, it's actually been holding up surprisingly well and just continuing our upward channel. We have a lot of investors excited about the Solana ETFs that are coming in around October. They just got delayed once again this week, but I do believe the Solana ones especially have a very high chance of getting approved. And I do think investors are going to be looking forward to this, but it might take some time for interest to come back because Google search interest for Altseason already plunged 50% from just 1 week ago. You can see clearly here how interest in Altseason was building up going into last week, but then as soon as price corrects, everyone just packs it up and goes away until the next price rally. So as for Ethereum Bitcoin, it's still in an uptrend, it still looks solid, and I still think it's going to put in a solid rally until at least 0.0019, which should be about a 30% increase on Bitcoin. And if it's able to reclaim that major pivot, we can start talking about higher price targets. As of the past year's performance, we have Solana up 30%, Ethereum up 67, and Bitcoin up 91. I know these pullbacks and corrections are very painful, especially for new market entrants, but it's a lot easier to navigate this asset class if you have a more zoomed out, longer term approach and not get too caught up in the short-term swings. So we'll see what happens. I still think Bitcoin has to go a little bit lower before putting in another move higher, and we're still keeping a very close eye on what the global liquidity index does. I believe the global liquidity index's next trend will have a huge impact on this Bitcoin cycle and what we should expect for Bitcoin. So we will keep an eye on the US dollar index, which has a large impact on global liquidity, and for now it's been slowly grinding higher but hasn't really made any major moves. The market is currently pricing in a rate cut in September and then again in October and then a pause in December. I think we're going to have to see more rate cuts than that to save this economy, but this is what the market is pricing in as of right now. But hopefully some of the commentary from Powell on Friday can perhaps give us more clarity and allow the market to price in some more rate cuts. But for now, the forecast for real GDP in Q3 is still positive at 2.26%. Inflation is a bit stubborn at 2.8%, but the Fed might just have to accept this fact and still cut rates anyway, even though we've seen this spike up in the PPI recently, which is a leading indicator for inflation. It could just be a one-time spike driven by tariffs. And it is potentially something the Fed should be able to look through because we do know the labor market is weakening under the surface and the economy is weakening as well. And I don't know how long the Fed is going to be able to ignore that. Yes, we have markets at all-time high, but they might force the Fed's hand quite soon. and I do expect the S&P 500 to drag Bitcoin down with it if we end up not seeing enough rate cuts from the Fed this year and the market has to come to accept the fact that we're not going to get the easing super cycle that many investors are currently expecting. But for now, the federal government is still running huge deficits. That trend seems to be worsening year after year. Exponential debt growth means exponential money supply growth and currency debasement, which puts upward pressure on our risk assets like the S&P 500 and fixed supply risk assets like Bitcoin. But as always, let me know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.